Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. I've also been keeping an eye on some stablecoins that try to pass on the yield to the user instead of the issuer. You can think of them as tokenized T-bills. Even then, they've grown, but they're not really taking over the market very quickly. Okay, it's clear that network effects are pretty strong for stablecoins. It's hard for me to say how many there will be or how strong the network effects will be because some of them are like the unpleasant side effects of rules. A $238 million stake in BlackRock's Shares Bitcoin Trust is part of an investment of $418 million spread across several funds. This means that the Bitcoin ETF market is going through a big change. The SEC is becoming more open to accepting popular Bitcoin exchange-traded funds. This could cause Bitcoin prices to go up. Lyn Alden recently spoke with journalist Paul Barron about Bitcoin's promise as a way to store value. She also talked about the issues that come with its volatility and government control. Allen also talked about PayPal's move into the stablecoin market with PUSD, which has already been worth $500 million and is expected to go even higher. At the moment, established players like Tether are the market leaders. Even though there are problems, she stressed that new rules and the rise of stablecoins that pay out returns could have an impact on the market. Alden says that the price of Bitcoin could soon go up because more businesses are interested in it and rules have been changed in a good way. You can watch parts of the chat with Lyn Alden to learn more about what they talked about. Kindly like the movie, follow the channel, and turn on post alerts if you'd like to see more videos like this. Enjoy the movie. I believe that one of the most important factors that affects the price of Bitcoin is how open the market is around the world. And when you measure it that way, there are really two parts to world liquidity. One is the rate of credit creation and the other is the strength of the dollar. This is because, as I already said, a lot of foreign debt is denominated in dollars, which is why global liquidity is often measured in dollars. That part with the dollar is pretty important. Either more credit can be made quickly to make the world's money supply better, or the dollar can get lower. Around the edges, changing the denominator can make the market more liquid, which is good for everyone. So I do believe that we will have another good liquidity cycle in the coming years. As central banks try to tighten, things have been pretty much the same there for a while. I believe there will be another upward movement, and in that case I believe Bitcoin will do pretty well. So Bitcoin and stable coins have been the two most important uses of crypto in the past, right? A lot of people have become interested in these two things. Even during bear markets and boom markets, Bitcoin is a new way to keep value. The main thing is that it is a better form of money than most other money we know, but not many people hold it yet because it's still small. All of these things happen as people try to build influence on it. It changes a lot when it hits its total addressable market or gets close to what it will be in the end. It's easy to think of stablecoins as digital dollars. The need for dollars or desire for them is met by this. So far, there are two main ways that stablecoins can be used. One of them is the main unit of account for trading and DeFi on different crypto platforms. A lot of that will happen on Ethereum. The other big use of stablecoin is to meet the need for dollars in the global south, which Tron does very well. It's almost like the same object exists in two different worlds. In this way, stablecoins are very useful as a short-term store of value, like operating capital. Basically, being able to handle fluctuation is a bit of an advantage. You can basically say, I'm willing to hold something for the next 4 years more if you have a lot of money. Stablecoins, on the other hand, are like a checking account when dollars are useful. It has been shown so far that network impacts are important. It's almost like liquidity leads to more liquidity. So this is how Tether's network effect has been so far. It's been pretty amazing, and possibly even better than I thought. I've also been keeping an eye on some stablecoins that try to pass on the yield to the user instead of the issuer. You can think of them as tokenized T-bills. Even then, they've grown, but they're not really taking over the market very quickly. It's clear that network effects are pretty strong for stablecoins. And I'm not sure how many there will be or how strong those network effects will become because, some of it is like the unpleasant effect of rules. Some local ones try to use the government against the offshore ones, and you go back and forth between them. So I wouldn't try to guess what will happen in some situations. I do think it makes sense for all of these groups to try to get into the stablecoin market since it's big and could be rewarding. But it's hard to say what will happen. Lyn Alden says that Bitcoin has the same number of transactions per second as standard systems, even though the number of transactions is lower. She argues that as Bitcoin becomes more widely held and less concentrated among a few holders, it could finally replace traditional settlement systems that are inefficient because they handle a lot of transactions but not many ones. This is because Bitcoin is international and open source. Allen also thinks that AI will play a bigger role in the crypto business. She believes this will make things run more smoothly and quickly, even though laws are more of a problem for bigger cryptocurrencies. Everyone in Congress backs Bitcoin, which gives her hope for positive changes in the law. Keeping these things in mind, Alden's study shows that Bitcoin's price might rise as more people use it and as rules become clearer. Let's talk again. See some more clips from Lyn Alden to learn more. Taking things as they are, I think Tether is in a very strong place. A prime dealer has been more in favor of Tether than its competitors on shore. I don't think there have been any strong attempts to change that, so I think things will stay the same. I believe that some steady coins could continue to gain market share in the United States, but they are so far ahead on a world scale that it would take a pretty big shock to change that. So my beliefs are that the current trend will continue. That's why I think it looks like the main use case here is foreign in the US. Our payment systems work pretty well most of the time, but we have problems when we do business across borders. Stable coins have been very helpful in these situations. Regulatory arbitrage has played a role in some of it. For example, you could say that things are easier in banks, but they tend to have more red tape. I don't try to judge timelines too much, and as I already said, I'm not an expert on bullying outcomes, legal outcomes, or politician outcomes. But I'm still structurally bullish on the market cap of stablecoins. From what we've seen so far, it looks like the winners are benefiting from pretty strong liquidity network effects. Let me just compare these two things. As you said, the size of settlement amounts, because that number is just too big. America's gross settlement amounts are over a quadrillion times its GDP, which is measured in tens of trillions. That chart is pretty interesting to me, because it shows almost the same amount of transactions that Bitcoin can handle. On average, it's about the same number of deals per second. The only difference is that it's not open 24 hours a day, 7 days a week, and only certain people can use it. This means that Bitcoin is a lot like a Fedwire, but the global open source one is much smaller so far. That's kind of why I compared them. You can add things on top of them. Because it's at the bottom of a stack, Fedwire handles an absurdly large amount of processing for a small number of activities. A long time, I think it's been 15 years, and I think that trend will keep going for another 15 years. Of less fluctuation, and I think it's mostly because it's widely held. If a lot of people don't believe in something, one big player can use their power to blow it up or buy into it and move the market. When you get 5x or 10x more of an asset's broad distribution, you have more. There's been a cycle of distribution in the past where longer-term holders, or whales, will reduce their shares during bull markets to make room for more capital. After that, during bear markets, it usually goes back to the better hands. But every time Bitcoin goes through a cycle, its holders become more spread out. This is similar to how a new company starts to grow and become a publicly traded company over time. And I think that once we reach a certain point, the volatility and uncertainty around the stock will go down over time. Morgan Stanley has a lot less to lose in Bitcoin now. It has sold most of its Grayscale Bitcoin Trust shares and now only has about $189 million in spot Bitcoin ads.